Hi there, everyone. Maureen Sweeney here. Today, I am going to bring up the obvious. Before you sign any documents with your mortgage lender, make sure that you could explain every aspect of your mortgage loan, including how much you're going to pay, what is your payment schedule, what are the if you're getting a home equity along with your mortgage, you're getting a first mortgage and a second mortgage, make sure you could explain the difference between the two, which one gets paid first. If one of them doesn't get paid, how does that affect the second one? You can explain all of that to a third grader, and then that third grader can understand it. Why am I even suggesting this? Because back in the day, in 2006 and 2007, when when people were signing all these mortgages, in many aspects they actually didn't understand what they were signing. And what lenders were actually coming out and saying was, well, we didn't hold a gun up to their head to tell them to sign the papers. And these poor people were like, yeah, they didn't, but I signed anyway because they told me it was going to be okay. And all those people who said it was going to be okay, they weren't around to help pick up the pieces when the loan fell apart. And, and next thing you know, your interest rate goes up. You signed at one level, the interest rate at one part, and then it jumped up to this amount, and next thing you know, your loan amount went up, or there were additional fees cast in, whatever. There were so many horror stories that were out there. I'm not going to bore you with them right now. But one thing I do want to bring up is this article that I read the other day, which was the 5 contributing factors in the housing market crash. And this is an article from 2013. And there were 5 major factors. The first one was low doc loans, which was, they didn't have any documentation. So you're like, oh, just, what do you make? Tell me what you make. Or, do you have a job? What's your job? Well, we'll just write something in there. Any documents that you sign, I beg of you, make sure that it's correct. Why? Because the lenders, lenders are smart. They want their money. They want their money. And if they don't want their money, they're going to get your house and you're going to be out. So make sure you understand what you're signing and that everything is correct, because they're going to come back and it's going to fall in your lap. So you got the low doc loans, adjustable rate mortgages, which I touched on, equity lines of credit, more money needed for down payment, that you didn't put enough in your down payment, and mortgage insurance. Okay, so all of these factors, if you don't know what those factors are or anything I just told you about, you got to learn what they're about, because someone's going to try to sell it to you. And if you can't explain it to a third grader, then don't do it. Don't do it, because then there's other programs out there that you'll be able to understand, but you need to understand what you're getting yourself into. Okay, have a great day. Bye-bye.